Welcome to Profile Traders. This is Reza and you're listening to my market analysis for March the 21st. We are looking at a chart of ES here, and what we are seeing is that after 5 weeks consecutive of gains, this Monday was pretty much a non-event because we spent all day long and the range was totally contained within the overnight range. And towards the end of the day, we ended up closing near the very high of the day, which was in itself a bullish event. Therefore, now you should be on a lookout to see if we can clear above 2044.5. Once we do that, we are going to go tackle 2050, and once 2050 is breached to the upside, we should go for a test of the daily chart upside objective, which I provided many days back, which is calling for potential termination of this move somewhere around 2055 to 2060. And this measurement comes by calculating the length of this last leg up, projecting it more or less from this low here, which calls for that level to become roughly about 2060. So what we are seeing here is the following. In December, the Federal Reserve, the chairman of the board, Miss Janet Yellen, came and decided that it was time for the Fed to show muscle and hike the rates. The rate hike came in as a complete total surprise. Nobody ever jacked the rates in the middle of holiday season of December, and then that, along with the Chinese weakness, created a cataclysmic drop into the month of January. When market approached these levels of 1800, the millionaires and the billionaires and the hedge funds, pretty much the masters of the Federal Reserve, got into a room with Madam Chairman and told her that she better get her act together and come up and do completely opposite of what she did in December and make this market go back up. As a result, the very first meeting that she had in January was a totally shift of point of view, where she went from being completely hawkish in December to entirely dovish in January, talking about how the rate hike was a one-time event, that it did not mean that they are on the path of jacking the rates higher, etc., etc., etc. And at the same time, from that low of 1800, she provided trillions of dollars under the table that you and I do not know, to the Japanese, to the Chinese, to the European, to make sure that all the money was coming into this market. And then the last time that she met, it was complete total submission to Wall Street, where she came out and said, you know what, I apologize for what I did in December, and my talk about 6 times of a rate hike, I will wash my tongue with a soap and never say that again. If anything I will do, it's going to be a maximum of 2 rate hikes, maximum. And Wall Street went nuts. Now, the crossroad that the market is in between is number one, how much more of this orgy will go on just and simply because one single woman in this world has decided that instead of 6 rate hike, which was a BS to start with, they were never gonna do 6 rate hikes, it's now down to 2 rate hikes. Now, how much this can add to the market valuation? If you know the answer, I know the answer as well. Now, the second thing is, at which point are we going to ask ourselves, is there a reason why Madam Chairman cannot take the rates higher more than 2? According to her own language, if you listen to her interview after the FOMC, everything was a disaster. Economy soft here, economy soft in Europe, economy soft in China, economy soft in Latin America, outlook very uncertain. I mean, it was the most pathetic outlook on the economy I've heard from her for a long while. Now, if this is the truth, and if you listen to the outlook from every single CEO out there that is extremely bleak for 2016, at what point will the market consider that weakness and put a stop to this euphoric orgy, this delusion that is going on right now, that market is just in a booming mode because Madam Chairman has decided to hike the rates 2 more times instead of 6. Whatever it is, I am just reporting what I observed. Obviously, right now, based on this daily chart, there is absolutely zero sign of weakness. It is on a parabolic move to the upside. But one thing I know is that the more it will continue this way, only based on silliness from the central banks, the day also will come that the effect of this silliness will go away. Then when we're going to be left only with economic fundamentals which are not here to support the market, the reversal of this move can also be quite dramatic once it's going to take place. But as of right now, clearly there is no sign of anybody being worried, anybody being concerned, or at all anyone showing any speed or desire to exit this current Federal Reserve induced orgy. But keep an eye once we're gonna get close to 2060, because we are now approaching significant levels of resistance, very close to where we are right now. In terms of support, in my opinion, for anything to happen on the downside, 2030 is the key number. 2030 holds, we should continue up higher with a minor support at 2038.5, and then 2030 to the upside 44.5, 50, and then 60 to 65, which is my upside objective being reached based on the previous leg up which I showed you on the daily. Now for crude. It is of course following the market, yes, and it is also following the events that are taking place with a very sharp weakening of the dollar. The dollar weakens, crude goes up. The dollar strengthens, crude goes down, at least based on the correlation that has always existed. And I told you once crude was gonna reach 41, it was encounter significant resistance. Obviously, once it did hit the 41 in the very short term, it did shoot to 42.5, but on a closing basis on Friday, it came and closed again at 41. So this did exactly what ES did. It dragged a little bit within the previous day's range, but the close was at the very top of the range, which is slightly positive. Now 42 is the key area of resistance. If we do clear 42 to the upside, we should then go and tackle this very high of 42.5-ish. And if 42.5-ish doesn't provide support, based on the daily chart, there is a little gap in here. Do you see this? In here. This gap may fill at 44.5. Now somebody told me, because I said earlier on if 41 would get hit, that I would sell the house to short it. Please understand that I do not provide buy-sell recommendation. And if you're looking for somebody who will be 1000% accurate, you should go see a brain surgeon. This is a business about speculation, and this is a business about prediction based on extremely different variables, which make the business far from being certain. So let's see what happens here, if we can break or not break 42. If we do break it, we go to 42.5. If we do not want to stop and they want to close that gap that I show you on the daily, you go to 44.5. As far as to the downside, 40.5 is support number 1. 40. That level breaks. We have a POC down there at 39.45. We have another POC at 38.65. We have another POC at 38.15. We have another POC at 37.66. We have another POC at 34.76. And I'm sure if I go down the list, there are many other POCs. If you believe that this market is going up based on demand, you are entitled to your opinion. I do not believe it is the case. I do believe that both of these two markets, ES and CL, are bubble-induced Federal Reserve markets, and sooner or later, when the steam will be sucked out of them, all and every single of these POC in time should get hit and visited. Once again, it is my opinion. You may agree with it or disagree with it. Thank you for listening, and to the next time.